Hi everyone, it's a guy here, the unknown trader, and today we're gonna be looking at some of the good setups and some of the trades that I've traded so far. Okay, everything happened from today, 8 o'clock. But I usually go to the market at 8 o'clock and I want to open my first trade after 9 o'clock, okay, because I want the market to paint a picture for me. I want it to tell a story to me, okay, because nothing changes, everything remains the same. Once you master this, you will stop blowing accounts and you'll be consistent, okay. This has never changed. It is never gonna change. People say the markets evolve, but only few things change. The way they trap changes. Okay, I'll show you what changes actually. But right now, let's jump into it. As you know, today it's the 21st of June, which is of July, which is Friday. We have no news at all on the calendar. No news. That means this Friday is gonna trade in a good way. We don't expect unexpected large volatility or whatsoever. Okay. So now that we got this out of the way, let's look into some of the good trades. Okay, this is Great Britain USD. We had a market that was going up. Okay, I don't use trend lines, I just draw them to see the direction in which the trend is going. I just want to see if the market is still going up or whatsoever. Okay, but I don't care if it bounces here. I'm not going to open a position. I open a position based on my setup, and if you follow trend lines and it's working for you, that's good. Okay, do what works for you. That's the name of the game. So we had a market that was going up, okay, and then all of a sudden it started, let me remove this line, it started consolidating. Okay, it consolidated. This to me is consolidation. Okay, and then we had a Tuesday that gave us a red day. A red day is, for instance, please pay attention to this. If you have a market that has been going up for many days, when it goes up, you have to realize something. It's opening low and it's closing high. Okay, these dotted lines here represent a day. Okay, so it opens low, the following day it closes high. This clearly shows that this market is going up. Okay, it opens low because the close of the previous day becomes the open of the next day. Okay, so as you can see, all these days while the market was moving up, we call that pump. Okay, because markets will have a pump and a dump. That's all that markets have. It's a pump and a dump. Okay, so this is a pump. They are pumping the market up. Okay, so they are showing you that it's going up, and if you are using most indicators that will show a sell and a buy, what happens is most indicators are lagging, so they're gonna be slow. Okay, they're gonna lag. Usually on day trade, that's when they start showing you, this is an uptrend, and you start buying, and that's what these institutions want. Okay, because remember, institution always trade against you. Okay, so this is what happens. On the third day, your indicators will be showing that, oh, it's an uptrend, and at that moment, because indicators are late, at that moment the market starts consolidating, it starts trapping you, and you think it's an uptrend because your indicator said it's an uptrend. Okay, however, it's not. It consolidates, the next day it does what? It breaks down. This is our first red day, because this market was opening low, closing high, opening low, closing high, but all of a sudden it starts opening high and closing low. This is our day one. Okay, this is our sign that, okay, the markets now are ready to reverse, and then the following day the markets do the same. Okay, now you have noticed that we are on a dump side. Okay, because market pump and dump, this is a dump side. They are throwing the market down now. Okay, once you master this, you will stop blowing accounts. Okay, they had a pump, now we have a dump, and if you're using your lines, you will see that, okay, now it's going down. Okay, and the indicators will always show you a sign late. That's why I always say the best indicator is price itself. Okay, I don't have fancy indicators, I just have previous high and previous low, and I use session time colors, and I also use whole numbers. Okay, whole numbers of prices, so I don't use any fancy indicator. Okay, and on this chart everything is clean. Okay, day 1, day 2, day 3. Okay, usually on day 3, that's when your indicators start showing you and the market will be ready to reverse. So today I knew that, okay, we had a day 1, we had a day 2, we had a day 3. However, this is day 4. and it's a Friday. You know, Fridays and Wednesdays are good days because they will have high volatility. Okay, these days move crazily, Wednesday and Friday. Why? Because the markets are always moving in threes. Monday's day one, Tuesday's day two, Wednesday's day three, and some of the currencies will show you will have a day one on Wednesday, have a day two on Thursday, and have a day three on Friday. So it's always number three. On day three, they always move. Okay, and this is just another setup where Monday is always day one, Tuesday is always day two, and Wednesday is day three. If you look at most Wednesdays, you'll see that they trade like crazy. Okay, so this is what we have. And I saw that, okay, today's Friday, what are we expecting? At least we are expecting maybe a fake breakout if they are going to go back to the top, because this is day three. We want to see what happens. However, when I come to my 15-minute chart, when I came this morning, I had a trade like this, and this thing has gone up about 64 pips. Okay, and I always put you see this highlighted block here, this is usually my strike zone where I want to open a position, but it has to be at 50, because 50, 75, or 25 pips. Okay, that's where I put my strike zone. So it's around 50, as you can see. This is my strike zone. Okay, so what I was expecting is, okay, yesterday we had a high, the last high made in US session. That's the recent high in towards the end of the day. So this was my consolidation, and I drew this line. So I knew the market was trading it's gonna trade between this line. So this became my consolidation. However, I was expecting to see them come down, either have a fake breakout and reverse. Okay, that's what I was expecting them. So today around 9 o'clock, what I saw was, okay, they broke out at around 8 o'clock. They broke out, okay, and they gave us an M. If you go to a lower time frame, that's when you will see what they gave. Let's go to a 1 minute time frame. Okay, quite quick. Okay, I just want to show you this. I hope you grasp it. You see 1, 2, 3, and then they started consolidating to a point whereby they showed us that, okay, we are trying to go up. Actually, we are showing people to go up. Why? Because markets do three things: they show, they trap, and they reverse. That's all they have. They show, they trap, they reverse. Okay, because remember, institutions move the market, and they have no power to move them if nobody is buying when they are selling. So they need sellers when they are ready to buy, and they need buyers when they are ready to sell. So they will always show you something so that you open the position they want, because they open big positions. Say they want to open a position worth $15 billion. They can't do that if they don't have an equal amount of, say maybe they want to buy. If they don't have an equal amount that meets that needs from people who are selling, since they want to buy, then they cannot open a position. So to open a position, they have to show you something. Okay, so what are they showing you? They gave us consolidation, they broke out, and we have many breakout traders. Okay, so there are people who are actually buying here and they want to sell. So they show you, they allow you to make a little bit of profit. Let's see how much. This is roughly 20 pips. That's what they allow you to make. And then they start showing you, oh, we are going up. They reverse. You don't believe we are going up? Oh, we are going up. And then they reverse again. You don't believe we are going up? We are going up. And once they do this for the third time, now look at what's interesting. Now they are moving down. Okay, they are moving down. The following pullback, it's lower than this one, which means everybody buying here is trapped, and they're not willing to release them. Okay, so once you are able to identify a place where they have trap traders, then you will always be on the winning side, because they can hide their tactics, but they cannot hide their footsteps. Okay, and if you know that you don't move the market, then you have an advantage, because the only option you have is to ride on them. So you must look at their footsteps. Okay, now they're working the high, they're showing people that now we are going up, and people are busy doing what? They're busy buying, whereas they know that they want to go up. Okay, so this thing has moved about 60 something pips to the top from the low of yesterday. This is something interesting. Okay, 64 pips. Okay, so this is something interesting, and actually it got my interest once it broke here, because I was expecting it to go down so that it can be a fake breakout. Okay, so this is what they do. We're going up, we're going up, we're going up, we're going up, we're going up to a point where they start. Let's remove this line. If you see this line, this was my stop loss. Okay, when I entered, it became my stop loss, and I will show you why. Basically, it's because you see, this is the last push. This is the last push, because they were showing people were going up 1, 2, 3, and they were done only with 3 pushes. So they had to shift the zone to a lower level. Now they are, yes, go up, but they are not breaking these 3 points. Okay, so you have to be aware of that. And they kept pushing. We are going up, and if you look at the time, this is where time plays a huge role. Okay, if you looked at the time, this happened at 10:45, at 9:45 actually. It was going to 10, and you know that immediately 9:45, the 45 candle is the open of the last 15-minute candle of the hour. It's, say for instance, if you are using a time frame, this time frame 45, if you're using 15-minute time frame, 45 is the last candle of the hour, the last 15-minute candle of the hour. So it becomes a very, very important time. Okay, so what do? They pin and they engulf. Okay, let's see, pin and then engulf, pin and then engulf. They show you we are going up, and immediately they engulf, and they pin the high, which was the consolidation. Immediately, this is your entry, and as you can see, this is my stops. Okay, this is your entry position. Don't try to catch the high, just understand the 3 pushes, and once they move away from the 3 pushes, that's where you'll get your entry. And of course, my take profit was back to the low of the day, which the low is this line. If you look careful, they didn't hit it. So after this pin, that's where you close, because it's almost 1 pip to the low. Okay, and that is nothing. So this is 36 pip in just 3-4 minutes. So less stress, and everything was just good. Okay, and you were sure that they were done. Even this candle, this pin engulf on its own, you could have just entered here, because it shows it's the last push, and they've shifted the zones. So I'm not gonna, let's go to gold. Okay, because I also saw a good trade on gold that happened today. Okay, with gold, I will just pull a 15-minute chart. Okay, with gold, I'm on a 15-minute chart. However, let's start from a 1 hour. If you look at what 1 hour was doing, 1 hour, like, the market was just going up, and the moment indicators start showing an uptrend, that's where they begin to trap. Again, they gave an inside bar. 2 things happen on an inside bar. It's gonna break out and trend, or it's gonna break out, give a fake breakout and reverse, and that is the beginning of the reversal in most cases. I'm not saying it's gonna keep going down, but I'm saying this is the beginning of the reversal. This here, all this here, if you have a box, all this here up to this point where they showed you we are going up, and even this point where they said we are going up, this here, if you just do something like this, okay, or let's choose a red color, let's do this. Okay, this here, this shows you that, okay, we have trapped volume. Okay, remember, markets are not perfect. You just have to have strict rules. Okay, make your rules strict, make them bulletproof in such a way that they will always give you a high win ratio. Okay, so let's look at what happened. Went up. This is just their trap. They are trapping those using indicators whom their indicators are showing them that we are still going up. So at this point, they broke out. Market do 3 things: they break out, they pull back and they reverse. Why? Because we have breakout traders, something called breakout traders. Let me just write it down here so that you can understand it better. It's what? It's breakout traders. Okay, these are breakouts. These are guys who believe that, or who have read, or who have been practicing this practice of like saying when there is a breakout, they jump in immediately. They believe that the market is taking the opposite direction. And where do they put their stops? They put their stops somewhere here, okay? Somewhere here. And remember, the market is hunting stops, okay? This is where they have their stops, okay? Because they opened a position here and they have their stops here. Let's go down to a 15-minute chart because now we can see things a little bit clearly. Okay, this is where they have their stops. And remember, the market doesn't care if it... You might think that, okay, they just came 5 pips. What are they making? Guys, with these 5 pips, remember, there are billions and billions and billions of 5 pip stops right here. And when they get to this point, you see there are 2 lines here. There is this gray and the red one. They just increase the space between this, and this becomes the spread. They can go up to 10 pips of spread. What does that tell you? That tells you that they can grab orders that are too far. They can go 15 pips. They can go 20 pips quite quick, like, and all your stops are hit in a second. Okay, you'll think that, oh, prices got here. Remember, these lines we see are only for this gray line. You see, this is the gray line is the one that is making the prices. So when the gray line reaches here, you don't know where the red line reached. It could have, in most cases, it goes up to 20 pips. So it closes even people whose stops are here, okay, up here, whereas the price didn't even reach that level. Okay, so that's something you should just bear in mind. Okay, in my previous video that I posted today, I showed you how I took this news yesterday, but today I'm not going to talk about that. I'm going to talk about this one. So we have a market that if we go back to the 1 hour, we have a market like always. It opens low, it closes high. It opens low, it closes high. You see, opens low, it closes high. This symbolizes an uptrend actually. So, and then all of a sudden we have a market that opens. Okay, let's go to 15 minutes. I want to show you this in a simple way. So all of a sudden, as you can see, this market was opening low and closing high. This shows that the market was going up. Then they give an inside day. You have to know what happens. It's either let me not talk about the inside day, okay? And then because it symbolizes 2 things, either the market is going to break out and continue, or the breakout is going to reverse. Inside days always represent a reversal or a continuation, because on a 1-day time frame, if I'm using a 1-day time frame, this is only 1 candle, okay? So it's an inside candle. It's an inside candle, and an inside candle tells you that the market is going to continue or it's going to reverse. That's what it symbolizes. That's how it is, okay? That's how it's done. You see, this is usually an inside, so it just tells you that it's going to reverse or continue, okay? So without saying much or focusing much on that, because we'll look at that on another video. So for now, let's focus on the purpose of this video, because I don't want to make it long as all my videos. Okay, now all of a sudden we have a market that's opening high and closing low. This is a symbol that the market is going to reverse. This actually gives you our first green day. What is a green day? A green day is if you are using an hourly time frame. If this market was going up and up and up, opening low, closing out, opening low, just as I showed you, then you will have like green candles going up and up and up and up and up. Okay, those are green candles. If you are using green and red, those are the most common known colors, okay, on the charts. So this one gives a first red day. First red day. What is a first red day? That's the first green candle, man. That's the first red candle on your chart, because now we have a market that has been going up and up and up, made up of a succession of red colors, and all of a sudden we have 1 green candle. Oh, this is epic. 1 green candle after an inside day. So 1 red candle after an inside day. This shows you that the market is now ready to reverse. And don't forget this breakout, okay? That's why I've marked it red. So today, what I was expecting, because today is day 2, I'm at least expecting the market to fall for the 2nd day, okay? Because usually the markets are made up of 1 2 3, everything is 1 2 3. Everything in my video will be 1 2 3, because you can't keep the number 3 away from the markets. You just can't. Okay, sorry for this. Okay, you can't keep the number 3 away from the market. Everything is 1 2 3. Why? Because it's a psychological number. What do I mean? I mean, if somebody passes your yard holding a crate of a Heineken and tells you that, okay, there's a truck of Heineken that is giving free booze, yes, it's gonna like capture your attention, but you're not likely to react. A second person passes and says the same thing. Now your attention will be like, you will be interested. Okay, your attention will be triggered to a higher level, but still you are not likely to react. But if the third person passes and tells you the same thing, your mind is gonna react. You're just gonna jump and go, because now you believe it. That's why most of the time they will go up and up and up 3 days, and then they start reversing, because your mind will tell you that, okay, now it's an uptrend. So that's why mostly I focus on 3 days. Okay, 3 days. Okay, because on day 3, when it goes down for the third day, that's when people start believing, oh, now it's a downtrend. Your indicators jump in, oh, now it's a downtrend, and that's when they are ready to trap and reverse. So today as it opened, I knew that, okay, I calculated that from the low it was 60 something pips, okay, 80 something pips, okay, 85 pips, okay. But yes, because now I came late, I didn't calculate for Asia. I only came around 8 o'clock, so it was 66 pips. That's why I said it was 60 something for me, because Asia, I don't care about it. Okay, so what I do is I draw my line here, and I'll draw my line here. Okay, every night before sleeping, I draw my lines here. So this is a way of preparing for tomorrow. Okay, this is my setup. I tried to explain this setup to you, and now this is my consolidation. Remember, markets breakout, pullback, reverse, breakout, pullback, trend, or breakout, pullback, and consolidate. Now I have my consolidation. However, I've seen that, okay, this one was broken, which was good. Yes, I was expecting the markets to come down like this. However, I have to wait for my session to begin. Okay, now I'm gonna go to a lower time frame. Okay, because I'm coming to the markets at 8 o'clock. I want to show you on a lower time frame what happens. Okay, so now there is a pattern within patterns. Read Skabeker's book, Technical Analysis of Stock Market Profits. That's one of the best books, considered the Bible of technical analysis, and it's the book that will change your trading life. Okay, so what I want to say is, we have a pattern within pattern. We have a big box which is made out of my rectangular lines, because the market usually actually it moves in rectangles. Okay, so now I have a pattern within patterns. Now this one was broken, but look at the most exciting part. Okay, here's the exciting part. 1 2 3. This is the last push, which shows you that, oh, we tried but we didn't make it, and it's a pin, but it didn't gulf this one, so we're not going to call it a pin and gulf. Okay, and the market goes down, and immediately 8 o'clock the market start pulling up and up and up. Okay, and I was following this market. What I usually do is I come to a 1 minute chart, because it's easy to understand. Some people say it's complicated, but it's not complicated. Okay, if you've watched my previous video, you'll see how I tackle this pattern. Okay, so now I have a couple of indicators that I'm going to introduce. Okay, not fancy ones, but yeah, I'll show you. Not fancy indicators. Okay, now let me check something here. I just want to make sure I edit my indicator right, because I need to edit the sweet spot. As you can see, this is 100. This is the space between the lines. Okay, I'll show you what it means. Now if you look, you'll see that my lines are a bit far from each other. Okay, and now we have these colors. Okay, which is great, because usually this colors only symbolizes the session time. This is the only time I want to be in the market. However, I'm not interested in the first hour. I'm only interested in the second hour. Say in the morning, it's from this is from 8 o'clock to 11 o'clock, and there's a last one. This is from 2 p.m. to 5 p.m. South African time, okay? And this is from 2 a.m. to it's 2 to 5. This is 2 to 5, 2 to 5, 9 to 8 to 11, okay? So I don't care about the first hours because I want them to paint a picture. I only start getting interested after the first hour has traded, okay? Because remember, I told you they can hide everything but not their footsteps. So the second hour usually starts showing a story. I will show you. Okay, actually, let's go together. Oh, this video is already 25 minutes long, but you know, I always do this and I'm gonna do it with you again. Okay, let's see what we have. We have we have what we have what we have what we have a consolidation. This was our consolidation right before these days started, and this was our low. Okay, these are the lines we draw later in the evening, derived from this one. Actually, it was from here to here, so this line was like this. Okay, this is my consolidation, and I just have to expand this one because it's the low. In other words, I take the low of the day and the recent high made in Asia, made in US. Okay, so this is the recent high, this is the low, which of course became the low of the day. So what happens is, okay, when you come the following day, you want to see if this line has been broken. Okay, and yes, it has been broken. Okay, it has been broken. One push to the top, two push to the top, three push to the top, the final push where it was kicking. And then we have our pattern within patterns. Okay, now the market is trending within this line when the London opens. Okay, so what does that tell you? Okay, it came and bounced immediately before 2 opened, and then it started going up and up and up. And as I told you, I'm not interested on the first hour. However, I'm gonna come during the first hour and start doing this. Since I'm using a 1 minute time frame, let's go together. Okay, just so that you learn. This is because of my server time. You can't change the server time, guys. And if I come here, you see the server time is saying now it's 11:15, whereas the real time it's 1:15. So it's 2 hours behind. Okay, the server time is 2 hours behind, and that's one tactic they use against people, because you can't actually control your server time. There's no way to change it. You just have to make sure your sessions and your timing really takes the server time into consideration. Okay, so what are we gonna do right now? Sorry for that. Right now what we're gonna do is we're gonna start at 7 o'clock. Since we know that it's 2 hours behind, then 8 o'clock will be 6 o'clock on this chart. That's why down here you see it's saying 6:02 here. 6 o'clock it opens here, whereas we know it's 8 o'clock. When I come at 8 o'clock, this is when this bar is gonna start. That's why I have my colors. Okay, nothing fancy. They don't determine how I open positions, because usually people follow indicators and they want indicators to decide for them. They are just executing after indicators, which is, if it's working for you, it's good, but I really don't recommend it. Okay, I prefer prices. So what I'm gonna do, as you can see, it's 6. I'm gonna come to 5. I know that my 5 somewhere here, it's 7 o'clock, 7 a.m. So I want to, because I'm on a 1 minute time frame, this will also help you understand the 1 minute time frame. Okay, so what I want to do is I want you to understand what's happening here. Please pay attention to this. Okay, I know that 7 o'clock opened right here. 7 o'clock opened here. Okay, so I'm just gonna use this these blue lines, okay, to represent my time. Okay, this is 7. Let me make it straight, because okay, it's not straight, but it's okay. This is 7 a.m. open. Okay, so I'm just gonna drag it to just prevent wasting time. This is the high and this is the low of okay, 7 open here, and then this is the low of 7 o'clock. Okay, so basically we can do this, and we can drag the low throughout up to a point where it gets broken, so that we can see when it is broken. Okay, so that we can see when it is broken. Okay, I'll show you something very nice. Okay, so basically what do we have? Okay, where is our low of the day? Just have to, okay, because we want to take it back to the low of the day after it has, after it has pulled out, it has pulled back. Okay, because our I told you it opened low yesterday and it opened high and closed low. That's the first red day. It's the first day that did that. Okay, from many days. Okay, actually from Monday, from Friday, from last week. It's the first day that opened high and closed low. So that's our first red day. The following day we're expecting the same behavior. Okay, so let's see. But I'm not saying it's gonna go like that throughout the day. No, that's why I always take it to the low of the day. Okay, even if it's 50 pips, it's okay. Just get in, get out, and you are done for the day. And to capitalize on this, you can use high lot sizes once you become comfortable with this. Okay, now what you're gonna do is we're just gonna write 7 a.m. open. Okay, 7 a.m. open. I'm gonna show you how to finesse your entry level. Okay, let's see. Okay, this is 7 a.m. open, this is 7 a.m. high, and this is 7 a.m. low. Okay, good. Now I'm just gonna change the open to low and high. Okay, quite quick. This is the low and this is the high. Okay, this is what we're just gonna do quite quick. Okay, low and the high. Okay, this is good, this is good. Okay, so now what we have is we now have 8 o'clock. We only put this low when 8 o'clock is opened, because you don't know the high and you don't know the low until 8 o'clock is opened. Okay, so this is the first candle of 8 o'clock. Okay, I can't pull it all the way. Why? I'll show you. I can just pull it to a point whereby it's just visible. Okay, because it was broken the moment it opened. Okay, see, 8 open, made a high, and it was broken. So everyone here who entered at this point, either selling, either buying, was locked out. Okay, so what we know is 7 a.m. is intact. Okay, and we are looking for a sell. So we are looking for a sell. That's one thing we know based on yesterday. Yesterday opened high and closed low, so that gave us a thesis that we are looking for a sell. However, we must look at the market behavior. Okay, because our entry criteria will remain the same. Let me draw something here, just here, so that you can see. Okay, this is a giveaway, guys. Okay, I have this black box over here. I'm just gonna put some text in it, like criteria. Criteria. Okay, oh no, it's criteria. Okay, it's criteria. Yes, and I'm just gonna blow the size a little bit and change the color to something visible. And then, as you can see, this is criteria. We need a pattern. Let me write everything out. Okay, quite quick. You can write it somewhere else. We need something like a pattern. A pattern is when you talk about a pattern, we are talking about W's, head and shoulders, triple bottoms, triple tops, things like that. All the reversal signals, because now it's going up. We are looking for those signs. Okay, and we're also looking for either the high. In this case, we'll be looking for the high. We want to see the high in place. Okay, we want to see a high. Have they put a high in place that they are not gonna break? Yes or no? That is very important. Okay, I'm looking at the time because I have to start analyzing for 2 o'clock. It's beginning now, even though I will open a trade at what time? At roughly 3 o'clock. Okay, but today I've realized that there are no news and the markets have moved so crazily. So usually when that happens, I know that they will in most cases reverse. Why? Because why do they blow them more than 200 pips on a day where there is no news? So that tells you something. Okay, besides it's Friday. So we are looking for a pattern, we're looking for a high, and then we are looking for a pin engulf. Okay, pin. It's not always gonna give you this pin engulf, but it will give you this thing most of the time. Okay, okay, and most of the things I say, guys, I've learned from many people. Okay, I've learned from many people, even from me now. You can just learn 1% of the things, and when you go to others, you learn more and learn more and learn more. Okay, as long as you are learning. But there's this book called Technical Analysis of Stock Market Profits by Richard W. Scarberger. That is the best book. If you can buy it, just buy it, because it will change your trading life. Okay, even Peter Brandon, one of my mentors, has learned from it. So okay, let's continue. We need a pattern. We need about 6 or 7. We need a pattern, we need a high, we need an engulf, we need a engulf that engulfs all the traps that they have made. So yes, don't be confused by pin and engulf and this one. Okay, I'll explain everything to you. We need a breakout. Okay, and one thing I said is that the market is always moving in threes, so we need, after a breakout, as I said, the market's breakout pullback, that's where the key is. It breaks out pullbacks, but again there is this thing called 3, the number 3. So we need to see 3 pushes back, either 3 candles, 3 levels, or 3 pushes. This is what it traded back through 3 pushes to the breakout, into the breakout, into BO. Okay, this is 3 pushes into the breakout. Okay, I'll show you 3 pushes into the breakout. It doesn't mean it's always gonna break the breakout or whatsoever, but we need 3 pushes from the breakout or to the breakout or to the pattern. Okay, 1 2 3 4 5 6. Okay, this is what we need, and let me continue on what we need. Again, what are we gonna need? We need a breakout, we need a pattern, we need 3 pushes, we need an engulf, and we need a high to be in place, and we also need what? Let me see quite quick. Let me see. Okay, we need to see trap traders. Okay, you need to see trapped traders, because remember, they show trap and reverse, and while trapping means one thing. If they are gonna sell, that means people are buying and buying and buying. That's what I mean by traps. If they want to sell, that means people are if they want to sell, that means people are buying and buying and buying, because they always take the opposites and they have the power to move the markets. So knowing that you have the upper hand. Okay, as time is going, 8 o'clock opens. Okay, from 8 o'clock I only need the low of 8 and I only need the high of 8. This is the high of 8. Okay, this is something that happened today. Okay, and I'm showing you on live charts. So back to our colors. Okay, now we need a black color actually. Now we need, this is the 8 a.m. high. Okay, this is the high of 8 o'clock. Why? Because when 9 opens, then we have the low of, then we can put in our whole lows and highs. So I'm going straight to 9, which is gonna be 7 here, and it opens here. 9 o'clock opens here. Okay, now this is the time we begin to do deep analysis, because this is the hour we are looking for a position to open a position actually. Okay, if this hour doesn't give us an open, then the next hour. Okay, this is 9 a.m. open. Okay, okay, now we are looking. Let's see what we have so far. We know that 7 o'clock is the first candle of the 4 hour. That's why we take it into consideration. We are trying to trade the 4 hour time frame on a 1 minute. We are trying to, that's why I'm telling you that 7 opens, we have a high and a low. You know, I mix these things, but it's okay because you understand already. So by this time, what I have is I have a high and I have a low. So I know how this hour traded. So in other words, I'm trading the 1 hour on a 15 minutes and the 4 hours already. And I know where 8 o'clock opened. And I also know where 8 o'clock made a low, because already 9 has opened. So this is the low of 8 o'clock. This is 8 o'clock low. Okay, this is 8 o'clock low. So now I know how this hour traded out. Okay, because it is shown. I know that 7 open made a high and a low, and 8 o'clock opened and ran the high of 7 o'clock out, but it left the low. Okay, this is starting to paint an interesting story. The low is intact. Okay, so we're gonna need something. Okay, let's see. Now 8 o'clock has opened. What did 8 o'clock do? It opened and ran. 7 a.m. opened and high. Okay, good, and it made a high. Okay, this is the high of 8. Oh, this is interesting. What did 8 do? It gave us a pattern as well. This is a pattern. If you look at this carefully, you will see now that we have a pattern. I told you the pattern is MW's, M being a double top. Okay, MWs and triple tops, head and shoulder and stuff. Now we have a pattern. And let's look. If we look throughout the previous session, we know that, okay, we had this high. And right now, if we blow this thing up, let's just blow it quite quick. If we blow this thing up, we know that it has broken the high of that high that was made in the previous session. So now we have a high. They traded back to it, but they didn't really take these guys out. So what are they doing? Do we have a trap buy now? Do we have a high? Okay, if they make a high and they do not trade back to it, or they do not break it, then we have a high. We have a pattern. This is interesting. Okay, and then that means 8 o'clock ran 7 and also made a pattern and broke away from that pattern. So now what do we want to see? Do we have a pattern? Oh, back to our criteria. Okay, back to our criteria. Do we have a pattern now? Yes, we have a pattern. Okay, do we have a high? They made a high which broke that one, and they traded back to it, and they engulfed it with 2 inside bars with a doji and an inside candle. Then they gave an engulf. This shows that they are moving away from the high. So yes, we might have a high, but we are not sure until they trade back to it in 3 pushes. 3 pushes into the breakout, either the breakout or the high. Okay, 3 pushes into it. So this was our initial breakout that was now broken. Okay, now we need to see 3 pushes. 1. Okay, 8 o'clock made the first one. 9 o'clock opens, makes the second one. And now we need to know where 9:15 is gonna open. Okay, this is 9:15. 9:15 actually opens here. Okay, I just want consistency on my charts. Okay, so it opens somewhere here. Now we know that 9 o'clock opened here, and we also know that 9:15 opened here. Let's see where 9:15 opened. 9:15 opened here. Okay, this is where 9:15 opened. What did it do? Okay, 8 o'clock made the pattern and made the first push of the first push back to the high. Okay, the first push back to the pattern. Okay, first push. We can put number 1 here. Okay, this is our first push. Okay, we are looking for an entry, guys, back to the low of the day, and we need to see 3 pushes. This is the first push, as you can see, and then 9 opens, it goes down, makes another push. 9 made a second push. Okay, so this is something you start paying into attention. What is each hour doing? We saw that 8 o'clock opened and ran 7 high. That was good. Now 9 is opening, but it's not even going back. It's just going back into the pattern, but it's not breaking it. It's not even running 8 a.m. high. Okay, now this means they have a high. Why are they not running that high? Okay, and then now we need to know when 9:30 opened. Let's see where 9:30 is, because now, and I was following this chart just like this, but in real time, just that now I'm taking this video later, so that's why now you see that everything has already played out. I was following this 15-minute candle after 9. Okay, because 9 is the hour I'm interested in, and 9 is the hour that moves a lot. Okay, in Asian session 3:30 is gonna move a lot. In US session 3:30 is gonna move a lot. In London 9:30 is gonna move. Okay, so just bear that in mind. Now we have 9:30. What did 9 do? 8 o'clock made a pattern and traded high back to it, but it failed. It gave this doji candle and also an engulf. It engulfed it. Doesn't matter how small the engulf is. If it's an engulf, it's an engulf. Okay, if it engulfed the previous candle, it's an engulf. And in this case, they engulfed the previous 2 candles. Okay, that's good. And then now we begin to see the footsteps. Okay, I told you they can't hide the footsteps, and I told you they will trick you, but they cannot hide their footsteps. This is what you need to pay attention to. Okay, so now what did they do? Okay, let's see. 9 opens, gives a second push, number 2. Okay, that's great. And then it also comes up here. Remember, we can't say this is a push down, because see how it closed. This is just a consolidation, so they didn't break this candle. Study candle by candle. Okay, that's something that will help you. Candle by candle. I didn't think it was important until I realized that it's important. Sometimes you think you have a pullback and you count it, whereas it wasn't a pullback, it was just a consolidation. You see these two candles. Look at this white candle here, and look at one, two, these two candles. This candle just consolidated, so we can't take this as a pushback because it just gave a pin down, but we look at how they closed. So all these two candles closed inside this one, so this is still one push all the way to here where we see the railroad tracks, okay, railway tracks, okay. Yes, so now it's when we put our number 3, okay, just like in the previous example. Okay, now we have 1 push, 2 push, 3 pushes. Oh, that's great. Now we are waiting for that final push that shows that indeed we have tried and tried and tried to go to the top, but we have failed. Okay, so that's what we are waiting for. And okay, after the 3, they come down and they go in 3 candles, 1, 2, 3, you see, and then they engulf this, so here you have your first entry. Okay, let me just bring this, I just wish I could blow this down. Okay, let me just go to view and just full screen, okay, because nah, it's not working. I wanted to blow this away up, but it's not working. But as you can see, this is the last push after the 1, 2, 3, and the most exciting thing about this 1, 2, 3 is look at the first push. It's high. This means they're showing people we're going high, people are buying this, but immediately they move down. They've trapped these guys. They come on a second push, they don't release them. Look, just look, they close way below this one. They don't release them. You will think this is small until you open a position. When you open a position, you will know how hard it is to exit a position at a loss. So the moment they start pulling away from that position, you are in a loss, okay? And mind you, there is spread here, so you are at a loss. Maybe when you are buying, your orders fulfilled here. And remember, there are people who are using very big lot sizes, so if they are fulfilled above here, those people are automatically, because of spread, in a variable. Okay, so the markets know that 0. Look at the third, so the markets know that. And look at the third push, they don't. The markets know that. And look at the third push, they don't come any closer to this one. Okay, so these people going up who are buying here, they are trapped. Okay, and we have these people who are buying on these 3 pushes, they are trapped. Understand why they trade back in 3 pushes. Okay, so they are trapped, and they give one last push. They give you double pins and an engulf. This is your entry. You can put your stops anywhere because now you are selling. Your stops are safe as long as they are moving away from this position. That tells you that they're not going to release these guys. So where is your advantage to that? Okay, if you put your stops right here, you're already through the story that has been painted. You can see that they've trapped these guys and they are not gonna go back. That's why each push is down, 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 down. They are telling you that they are not gonna release these guys at the top. That means if you sell here and put your stop somewhere here, however, we only need small stops. Okay, this is only 13 pips, guys. If you put your stops up here, 13 pips, okay, you know that they are safe because already they are telling you that we are not releasing these guys, not by a bit. We are not going back to the top. Everybody at the top is trapped. We are not going back to this high. We are not going back to this second push, and we are not going back to this third push. Okay, I told you that this is just a consolidation, and I showed you, and this is the third push. We are not releasing this guy. We give you a final push. Still, we are not releasing any of these guys. So your stops are at a place where you know they don't want to go back, because if they go back up to the top, everybody here is released. So your stops are safe because now you have traded against the retail guys who were buying after being shown. Okay, this way you won't blow accounts. You know your stops are safe. So you could have entered here on this final push. If you didn't enter here, here's another entry. You see, here's another entry. They give you a pin. They try, you want to go up, they fail, they give you a pin and an engulf. If you look at these candles, guys, you will see, let me blow them up big time this time around. Okay, I'm gonna blow them up big time. You see what's happening. They are moving. You see they have the top. Let me remove the pattern because I believe you have seen it. Okay, I just want to show you something. I believe you have seen the I removed a lot of things when removing this pattern. Okay, I removed this line. Okay, so now let me see if there's something else I remove. No, it's fine. I removed this. As you can see, they went up, broke this line. The second time they came up, they just consolidated. And for them to hold this line with 4 candles should tell you something. You see how flat the level ground is. They've leveled their playing ground because they are showing you that we are not going beyond this. We are not releasing everyone who sold, because people who sold here will have their position filled somewhere here because of spread. So they are not going anywhere up there. But they are, with spreads, they are taking out everybody who sold here. So you can see they are moving away from the zone. Okay, they are then coming down. First push, they are not going back inside. Second push, they are not coming back to release these guys over here. Okay, third push, they are not coming to release these guys over here. So the third push, they are not releasing these ones. They haven't released 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 these ones. And again, they haven't released this one. Just look at how flat the playing ground is. Every time they come back, they make sure to level the playground. They make sure that the following candle is at exactly the same level with the previous one. Okay, so guys, you see, they try to go up, but they are not releasing anyone. They try to go up for the fifth time, but still they are not releasing the previous guys. So this is why I say, if you have any stop maybe above here, your stops are safe, because they are showing you that we are not coming back to this position by any inch. And immediately 9 o'clock opened. Let's see, immediately 10 o'clock opened. No, this is 30. Yeah, actually immediately 9:30 opened. I told you 9:30 is so much crazy. 9:30 opened here. 1 candle, they gave you another chance. 2 candle, they've leveled the playground. Okay, they are not going beyond this. Even with 1 pip, they are not. Okay, so immediately the third candle just gave this big candle, and that was it. They just went boom, boom, boom. And this is your take profit, because it's the low of the day. So actually you have about 48 pips in how many minutes? In 26 minutes. So how crazy can that be? Once they break here, if you are looking at your charts, you can just come and lock your profit somewhere here and leave the market to play. Okay, or you can after each pullback, you can just lower your stops. When they come, you lower, like for instance, after they've pulled back here, you put your stops here, and then when they go down, you just follow them up to the last candle. Okay, because you know they will reverse and start consolidating once they have everything they need. So in short, this was the best trade that happened today, and I've showed you how easy the entries are. Don't try to catch the top, because at this moment you are not certain if they've logged, but as time goes, they begin to show you their footsteps, they begin to show you their plan, they begin to show you levels they ain't gonna break, and they're not gonna break those levels unless if they break them. That means they saw that the money they want or the order they want to open has not been met. But once it's met, look at how big this candle is. They quickly shift the zone away from this nonsense. Okay, and it doesn't even take a lot of time to hit your take profit. It only takes roughly 20 something minutes. Say for instance, if you entered here, this is 26 candles on a 1 minute candle, so this is 26 minutes. You have roughly 48 pips, which is close to 50, 48.6. This is amazing indeed. Okay, so all in all, just go and study the trees, study the market patterns, study the structures, and most importantly, study the criteria, so you can just come and write them out. And don't open a position until everybody has been trapped, because once they trap, they're gonna go quick. 30 minutes your trade will be done. 40 minutes, 30 minutes, 20 minutes, your 50 pips will be hit. And don't try to be greedy to get everything out there. No, you can't, because they're just gonna correct. As you can see, the prices are going back up as they are preparing for the next session, okay? And you're gonna feel pain, and you're gonna exit at a loss than you would have entered at a win if you exited early, okay? Because I've read a book that says it is much wise to actually exit when the move is still strong, because when it starts correcting, it can correct 40 to 60 pips actually percent back into your trade, and that's when you will be forced to close your trade, because you see that your profit is being has been like drilled into, okay? So all in all, guys, I don't want this video to reach 1 hour. However, there's a lot to explain. Most people want simple things like trend lines and stuff, but I'm showing you something that will keep you away from blowing accounts, something that will turn you into a profitable trader. So here you only had like one entry, okay? One entry. This is better than trying to catch the high. You think this is the high. Actually, you think this is the high because it broke here and pinned, and then you just find that, oh, they're going, it's not the high, they're gonna drill into it. You now think this is the high, you open a position, they go through it, and you have many losses before you win. And you find that, okay, when you enter the right one, maybe here all the way to here, then you are just recovering what you have lost all during these times. But once they have given you 3 pushes and they have painted a story that we are not going back, then you are sure, and you have your one trade. You can use any lot size on these kind of trades. They are highly guaranteed. So if this video really helped you, you can click on the subscribe button. I know it's complicated, I know it's a complicated concept to understand, but the more you start learning it was hard for me to understand this as well. It took me a lot of time, but the more time you spend on the screen, the more you start changing your mindset, just to understand that you don't have the power to move the market. The only way is to ride through them, and the best way is to learn how they behave, how they react, how they trap. Because once you see them trapping, and you know that, oh, now they are done trapping, because they can't hide it. They can't hide this, guys. If you wanted to play safe, you could have entered here, because this shows you that they are moving away from all this trapping nonsense and stuff. So here many people have been trapped, and many people were losing, many people were doing a lot of stuff. There's just a lot that has been happening here, so you don't want to be part of this. You just want to be patient, wait to see what is once they are done, because even here now they're showing you they're going. Once they are done, you can just enter. It's safe for you, and you just come and take, because here it's better to take 30 pips that are guaranteed than to take than to be stopped, open and stop, being stopped, open and being stopped, okay? It's better to take 30 pips that is highly guaranteed. And since it's guaranteed, you just know that, okay, after this inside bar, an inside bar represents reversal continuation. In this case, it's a continuation, because already they have everything they wanted. So they are not going to go beyond this. They're just going to go down. And 30 pips in just, 13 minutes. It can't be better than that. I assure you, it cannot be better than that, okay? And right now, I'm just gonna be looking at some currencies, like because we only 14 minutes into the US session, and I'm gonna be looking at things like let's go to Asia. I saw GJ and EJ. I saw how crazy they move. As you can see, this is where I was analyzing my trades, okay? This is where I usually analyze my trades. I open multiple charts, okay? I just saw that this one has gone up crazily, okay? Let's see. And remember, there's no news. Okay, they've started consolidating, but since today started, they have gone up about 200 pips with no news. That's 250 pips. That's something you should be curious about, okay? If they can pump it without any news, it's gonna be much easier to drop it, okay? And I saw that this one as well, it was like vertical move is usually a stop hunt, so there are more chances for them just to reverse it, okay? So those are the things I will be paying attention to, because again, we know that markets break down, pull back and reverse and do all sort of stuff, okay? But this was anticipated. Open low, closed high, open low, closed high, and then still this one was anticipated, and this is just a sign of what we call parabolic. You see, this was a sign to show that they were just gonna explode, but all this on another video. Okay, so thank you. I don't know if you're gonna if you've stayed this long to watch this video, then you're serious about it, and just try to understand. Okay, just try to understand and get your hands on that book called Technical Analysis of Stock Market Profits by Skaberger. Okay, Richard W. Skaberger. That's the best book that will help you. And I'll be dropping more videos in the future. And you can also tell me that I know this is a concept. It's a difficult concept. You can just come with recommendations. Okay, so thank you.